Hi guys, welcome to Navyashri Vlogs. Today I am discussing here accounting for managers in topic international financial reporting standards. In that I am discussing here features of IFRS, major objectives of IFRS and importance of IFRS. National Financial Reporting Standards, shortly called IFRS. What is IFRS? International Financial Reporting Standards (IFRS) were introduced by the International Accounting Standards Board (IASB), which took over the objective of harmonization of accounting standards throughout the world from the International Accounting Standards Committee (IASC). In the year 2001, the standardization of international accounting practices was necessitated in view of the growing phenomenon of globalization and with a view to fulfilling the day-to-day needs. IASC was brought into existence in the year 1973. IFRS harmonized accounting standards all over the world. IFRS is a globally identified set of accounting guidelines and guidelines that offers a commonplace language and framework for economic reporting. Its purpose is to ensure that economic statistics supplied through organizations are accurate and dependable, allowing traders and other stakeholders to make knowledgeable decisions about investments and other monetary transactions. See, what are the features of International Financial Reporting Standards? First one, principle based approach. Second one, fair value of accounting. Third one, comprehensive income. Fourth one, consolidation. Fifth one, transparency. First point, principles based approach. The rules framed under International Financial Reporting Standards are board based and not very elaborative, prescriptive of inflexible in nature. It is the main feature of IFRS in accounting. They are basically founded upon various principles and some of the regulatory outcomes. This approach does not envisage micromanagement at any level, and the business entities are free to use their commercial judgment or discretion within the overall framework of international financial standards. Second point, fair value accounting. Accounting based upon historical cost based principles suffers from a number of shortcomings. IFRS encourages fair value accounting principles which are considered forward looking and superior one has compared to the historical cost based principles. Gap, it is included in the features of international financial reporting standards. Financial reporting based upon the fair value accounting principles is most suitable for the potential investors who get performance over other stakeholders under the IFRS. Third one, comprehensive income. The concept of comprehensive income is of recent origin in the evaluation process of accounting standards, and it occupies an important place in the agenda of IFRS. Comprehensive income provides transparency in showing all revenue, expenses, gains, loss, etc. Fourth one, consolidation. Under the consolidation technique, which is a part of international financial reporting standards, the assets and liabilities of a company's subordinate Subsidiaries are required to be valued at their fair value as on the date of the acquisition. This is a significant departure from the traditional gap standards under which the minority interest is excluded from the fair value adjustments, as it shows the features of international financial report standards. Fifth one, transparency. Transparency is yet another staking features of IFRS. Transparency in accounting and especially in the preparation of financial statements come from the underlying and strong faith in the market focus. Major objectives of international financial reporting standards. First one, to make available in the public interest a single set of financial reporting standards on the basis of principles which are of high quality, easy to understand, enforceable and acceptable to the entire global committee. It is the one of the objectives of IFRS. These standards require the financial standards and other reports prepared by a company to be of high quality and transparent, which provide comparable information for various stakeholders, including the investors, the player in the world's capital markets, and other users. It is the objective of international financial reporting standards. Second one, to encourage the application of the standards under the IFRS amongst various stakeholders to the maximum possible extent in the objective of international financial reporting standards. Third one, to take into account suitably the requirement of an array of size and type of entities in different economic settings prevailing in the world. Next, importance of IFRS. First one, level of confidence, risk evaluation, merger and takeover activity, investments. First one, level of confidence. The main advantage of adopting international financial reporting standards, which is considered to be a stable, transparent, and fair accounting system across the world, would be that the confidence level of investors, domestic as well as foreign, would be boosted. It is one of the significance of IFRS. Second one, risk evaluation. If the financial data and other statements are not prepared in terms of international standards, the investors generally assign some premium. Introduction of IFRS would rule out such hard hurdle to cross. Second one, risk evaluation. If the financial data and other statements are not prepared in terms of international standards, the investors generally assign some premium. Introduction of IFRS would rule out of such hurdle to cross border listings, and such the investors would be the gainers. Third one, merger and takeover activity. As the introduction of IFRS would eliminate the need to re- redesign the financial statements, the way to across border mergers and acquisition would be facilitated. Fourth one, investments. If the IFRS are reduced in a country and various business entities became international financial reporting standards compliant, the comfort level of foreign investors would be enhanced, and they would find such destinations more lucrative. It is one of the main importance of IFRS. Advantages of IFRS. First one, improved decision making. Second one, access to international markets. Third one, cost saving. Fourth one, enhanced credibility. Fifth one, mergers and acquisitions. Sixth one, investor confidence. Disadvantages of IFRS. First one, complexity. Second one, lack of transactions. Third one, judgment based reporting. Fourth one, limited industry specific guidelines. These are the advantage and disadvantage of IFRS. Conclusion. In conclusion, IFRS play a critical role in promoting transparency and consistency in financial reporting, making it easier for organizations to prepare and interpret financial statements and for investors and stakeholders to make informed decisions. These are the international financial reporting standards. I hope you like this video. Please like, share and subscribe to my YouTube channel. Thank you.